The broadcast is now starting. All attendees are in listen-only mode.
Hello everybody, welcome to join our webinar, Let's Learn Future. This program is brought to you by LifeChamp and sponsored by the Bursa Malaysia. And today we are very excited to bring to you this topic, which I think many of you express strong interest to learn, which is the computer-aided back test system. Now, before we begin, just want to check if you can hear us. If you can hear me and see our screen, please click raise the hand button. All right, on the control panel, please click raise the hand button. All right, excellent. I see many hands now. Please put down your hands. All right, thank you very much. Now, my name is Yong Chen Chook. I will be a moderator for this session, and I have received some emails saying that some of you are very looking forward to this session. Today, we have invited a very experienced trader, full-time trader, to share with you how you can do a back test system. Now, we have before we begin, just want to do a disclaimer. Like I said in the previous webinars, whatever we share in this webinar is only for educational purpose. If you decide to buy or sell long or short any contract, and you are financially responsible for all your decisions. Okay. Now we have planned a series of BMD webinars for the whole year, and now we are on a computer-aided backtest system. Next month we'll be talking about case study and market analysis of FKLI. So if you often want to trade FKLI, you can stay tuned for our next month webinar. Or if you see that now trade war is getting a bit more serious, then you want to see how you can hedge your positions in the stock market through futures. Now, stay tuned for our next webinar in June. Now, allow me to introduce you this experienced speaker on the line now. I believe you are seeing him on the webcam. He is none other than CC Yong. He's a full-time trader. He's also a local participant of Bursa Malaysia derivatives. Then a local participant means that 1 month they have to trade more than 1,000 lots. And of course, he has traded more than 1,000 lot every month, so he is qualified as a local participant. So can you imagine the sheer volume that he has every single month? That is crazy, right? And he's also the founder of Straits Index Sdn Bhd, which is a proprietary trading company and associate participant of Bursa Malaysia Derivative. And he's also featured on many media and columnist for Singchiu and also columnist for Money Compass. All right. So now, without further ado, let me hand it over to you, CC.
Hi, Shane.
Yeah,
yes,
thank you so much for joining us.
Pleasure's mine. And okay, let's restart today webinar. Very good evening to everyone. So thanks for introducing me just now. Okay, today's topic is actually on this computer-aided backtest system is we're using this computer technology to help us to identify, set up, or any instrument or method. Especially important when you actually comes to test whether the result will be what you actually wanted, probably in the next 3 or 5 years. So let's get started. So first thing first is the backtesting is actually part of algorithmic trading. And this is a hype of a topic, everybody will be discussing about this. And I believe some of you has been trading using this technology. But of course, to start trading algorithmic, you need quite a number of things. So first, you must know how to trade and so on and so forth. So today we focus one of the element which you need to do back testing, and which most people will be focusing on this. But this is not the most important part alone, but there are other things like risk management and probably how the method that you want to deploy or test in your system. But this is actually something to start and get interested and excited, and then before you can grow to other thing. But of course, you probably need not only this, but you need probably quite a number of things before you can really fully deploy your algorithmic system to online, or it's actually automatic trading for you. So this backtest is just part of the algorithmic trading, and backtesting can also lead to systematic trading or mechanical trading, and this is not necessarily automatic trading. Mechanical trading or systematic trading, probably you can set a set of rules, design these rules, and test in the backtest system. And then once the backtest system is actually done, you can actually trade manually, because automatic trading is actually not really available to everyone, but it's actually getting easier and easier. You can always request a broker to give you an access to any API to do this automatic trading. But if you are not that into programming, probably you can actually still do it manually by setting some rules, mechanically trade the system. So today I will show you the example of a backtest system with only point and click, which means you don't need really to start programming, okay? But you can actually start taste this backtest by using mouse, point and click. So and by starting doing this, hopefully it can open the doors for 1,000 possibilities in your trading. Now, okay, why we want to computerize backtest rather than you can subscribe to any charting program or through your brokers, or websites. You go through one by one these stocks. You can set the indicators or time frame that you wanted, and then yeah, you can actually do your own manual, or using your eyeballs, to identify the setup needed and so on and so forth. But why computerized backtest will be much better or needed? Because first thing first, it takes confirmation bias away. And what is confirmation bias? Confirmation bias is something that our brain usually lie to us, or we without consciously weighing this. Actually, sometimes we tend to see what we wanted to see rather than what is actually happens in the market, or whatever the signal that we take. We may be actually, this is the signal that we wanting it to happens, and we only capture this kind of signals. Let's say, for example, everybody think that start up a business in food and beverages is making money, because you see a lot of F&B business doing very well. But do you know that probably most of the F&B startups actually fail eventually, and those you see them successful, those actually you want to see, because you didn't realize that actually many more are actually not successful. So this we call confirmation bias. You need to iron out this from your trading system. You don't want something that you think the system worked this way and you wanted it to happen. So this is the only thing or important for the start. You have to iron out from your mind. Second is because you can't lie to yourself, because sometimes it's not really lying, but our brain is such a way we try to patch imperfection in our life, and make it we think is actually perfect in the real world, but which they are not. So you take this away by doing computer. It doesn't understand how to comfort you, so they will just shows you what is the test result rather than they show you what you want to see. Okay, so second thing is crucial. Third is actually statistically represent the system or strategy. That means that shows you how many trades it can be done, how many trades are in long or short, this kind of idea. So it gives you the idea overall, and then you can apply these statistics or formulas or ratio into your calculation of your risk, winning ratios, expectancy, Sharpe ratio. So this will be certain elements that actually helps you to judge whether the system that you wanted it to be will be successful when you deploy it live. Now, before I go further, I'll give you some tests where this is a famous, the color of the dress. Some people will see they are actually blue and black in color, but some actually will see this dress as in beige color or golden color and white. So why this group people actually has different perception over the same dress? For example, now some of you may see one color, then the other may see others, because your eyes actually, or more precisely, is the brain lie to you. It doesn't really lie, but it actually give you a perception, because perception is actually based on the environment. Or the perception can be also called bias. You see, this graphic actually shows that both actually are the same color that we see, which is at these two boxes, okay? And why we see different? Because of perception. I mean, when you take into account of the environment, then you get different perception. That means your mind actually can cloud you for what you see. So usually in the real world, what you see is not necessarily what is actually happens. So this actually try to help you. The computerized trading backtest actually try to help you to iron out this element. Next, before you really trust me on this, try to see these pictures. This picture is actually a famous test, which you see a lovely lady with a nice looking picture. But if I rotate this picture to you, you see something different. You see, I didn't change this. I just rotate this picture and try to see what happens to this face. Okay, you see actually the picture is actually not what we perceived previously, although we thought that is a very nice feature of a face, but in reality, if you switch it to what we think are, but actually our brain just repair this odd looking face to a perfect face when I rotate it 180 degrees. So this shows that how important for you to not to trust yourself in what you see, especially in trading, because that is the first thing usually most people will be making a mistake before they start trading or after they start trading for a while. Is actually we already falls in a trap that the confirmation bias stage, which causes us to believe something that we should not overconfidence into certain setup or signals. Let's say, for example, this is a classic breakout, which you can see over here. The price breakout from a 200-day moving average. Okay, so usually this is actually signify a buy signal. Okay, from long-term point of view. Okay, the price is actually testing and broken, okay, the resistance. So usually it results in a higher, the price will go higher at this point. But in reality is actually what happened was at this point, the chart may actually, the price may broken the chart, in terms of the long-term resistance. But at the end, the price actually go even lower. So of course, we can say that most breakup works, but certain breakups doesn't work. So you have a condition that to put in play before you really trust this breakout alone. So we can say that there are other conditions need to meet before the breakout work, but you have to list down what is the condition. So you need a backtest system to tell you what is actually are the things that you need to understand before you actually trust a breakout. But how to justify the conditions valid? And every new condition carries an exponential possibilities, because if you add in one element after another, you actually adding in more and more complex or variety or possibilities of the result of certain breakout by adding one element into it. So because true and false actually carries exponential result, when you add more and more elements into it. So one need to test out all these specific possibilities. But if you're using manually testing it out, actually it's almost like take you 8 years, to do so. So and that's why this computer aided backtest is so important, because computer could have like take 5 minutes, 2 minutes to test whatever you. If you do it manually, probably you need well, days or weeks. They might just take minutes. Okay, so to choose a pattern or condition which this breakout could work, or you want to rule out entirely, because if you really backtest it enough, some of the setup that is well known but not necessarily can be used, because some of the system you can actually rule out entirely. That means it doesn't apply to probably these particular sectors or this particular instrument stocks, futures. You cannot use breakout. Let's say, for example, so how to get this fixed is you need a computer backtest system, because computer can do thousands or millions of times faster than what we can do. But before we start, I start to show you an example. Let's talk about advantages and disadvantages of using computer backtest. So first thing first, advantages: it makes use of historical data to test instead of take years to forward test. Because if you want to test something, you can use a historical data which you can collect it, or you can purchase it, or you can. There are a lot of websites actually allow you to download a free data for backtest, or which we're going to show you. But of course, it depends on the license of the data. Some actually was given, you allow you to backtest and so on. So make use of this historical data rather than forward test. Means I do a paper test from now for the next 10 years, but you need 10 years to develop a 10 years testing, right? So which is actually not possible. You're not going to wait 10 years to start trading. So the historical data test is actually the advantage just of one of the it to start trading. Second will be eliminates confirmation bias, which we just spoken, because it won't see things that you want to see. The computer says that if you set a condition buy, then you buy. But when we browse through the charts one by one, we say, oh, this condition I don't want to buy, this condition I want to buy. But because you know the answer, because you look at the chart, you know the answer, this one is go up and down. So that's why you always give yourself a condition, what to take, the signal to take. But it's actually not working this way, because that one is actually you try to, look for a signal that after you know the end result. But computer backtest actually know you're testing it. Okay, I set a criteria. If the criteria meets, whether it's I do a long or short, whether it makes money or I don't make money. So there's no confirmation bias when you start doing computer backtest. And then you can develop and refine a trading system by recognize patterns that repeats itself. Because if you backtesting, you can see, you can keep on backtesting your system, or just randomly pick one of the strategy and throw in the data or date and so on and so forth to see whether it actually fits into the system, and or whether the system will still works, or a system that you designed probably a few years back, whether it still works today. So you can actually test this pretty fast. And then number 4 is test the potential profits and losses. So sometimes you need to know, okay, if I do this, let's say your friend probably tells you, oh, I'm using EMA 22 days, so I can make quite a good money for the past 2 years. So you can actually help him to test, or yourself to test whether I'm using the same strategy. So for past 2 years, I make money. So can I lose money? Or what is my losing ratio? I also can do a forward test, which I randomize the data, or I actually backtest the past 10 years rather than 2 years ago, whether this system is still making money. If the system cannot actually make money the past 10 years, the last 2 years is making money, this could be, some trap which most backtests will lead you into, whereby your system will make money in backtest, but in real life that doesn't. So, and the last is understand the trading system, so that if you're trading this way, how much money that you will lose, which we call drawdown. And effect of money management. I mean, you can apply, let's say, money management into this trading strategy. What is the result? If you don't apply, or you take a maximum highest risk possible, or lower risk possible, what is the result will give you in terms of return in long run. So you don't be surprised that sometimes you take a higher risk, so your long-term profit may not be high. But then usually a lot of people will be having this problem where they have one good trade that make money, but out of 100 trades, only one good trade make money, and the system actually make 100%. So do you call that a good system? Not necessarily. Sometimes you need, let's say, 90 small trade, not so good, but making money trades, and 10 not so big loser 10 trades, which makes 90% winning ratios into your system. So probably you will can choose, you want one big winner, home run, or you want something that probably a small money making, but you have a very consistent returns. So all this can be tested thousands of times. You can apply can I reach 1% to 50%? What is my potential result in this system? So if you want to try manual one by one to calculate, so it takes you years, but this will on the flies, a few hours or few days, can give you the result that you wanted. And last but not least is actually a similar scenario. Let's say, for example, elections, pre, post, US presidential elections and so on and so forth, or any weather disaster, So you can actually simulate certain environment, or you test particular time to test whether during this kind of time your system can tolerate this kind of turbulence or market. So this gives you a lot of actually what I can say is a lot of situation where helps you in the future, whether to give you a confidence that you can survive in the next crisis. So this will be one of the advantage. And of course, there are also some disadvantages, which first, you assume history will repeat. By doing back test, you are actually assuming what happens last time will happen in the future. So that is actually a risk already. The market can be so random, which you don't see a repeat. But of course, if you try to look the picture to match a picture, so again, that is actually confirmation bias again. So we want to know that you are not trying to be so confident, assuming the history must repeat, but you should actually trade with a caution, which the history may or may not repeat, but you must survive in any trading condition. And second will be sometimes you over optimize a system where your system looks so perfect, and you make one trade in a year and it makes so much money, okay? But this is probably also not something that you are looking for. The reason is because that gives you a potential risk, which you are so reliant in a big home run, and this home run may only exist or comes back to you in the next 10 years. If there's no such thing happens in the next 10 years, every day you may not be making money, or you're just waiting for the perfect timing. So this could be out of the context. What you want to start making money by applying this system. And yeah, so third is actually the cost of skills are required to implement it, because you need some skills to be in programming. But of course, if you're so interested in trading, I know some people that so interested in backtesting and programming and trading, so they actually learn programming. So it will cost you some time, and you need some skills before you implement. For example, you need some skill to know this system won't work. Like sometimes people shows me some ideas. Can I do this and that and start make money? I mean, before I really go on and write a code to test it, actually I know this won't work, because you have tested so many things, and eventually you roughly know what kind of pattern you actually discouraged to do it. So you need some skill, you need some experience. Of course, you also need some cost, which time, money, to acquire this kind of thing. Some software actually may cost you a bomb, before you acquire and start doing the backtesting. Number 4 is the incorrect test or concept will lead to disaster results. Sometimes you think it's actually work, but it may be not the case. So you need to have this experience. And the next is actually correct system may not be able to stand the test of time, because sometimes you get a very good system, but once you start plugging and start doing live trading with this, it may not work at all, you know. So that's we call you need to do a forward test, and the forward test may be fail even you have a very good system. And system is only a small part of successful trading business, because it's not the entire thing, you know, in trading. So, but of course, in order to probably let you get started, so we actually need to start testing it, because when I was first starting, of course I did some programming myself, but of course there's a lot of possibility to think. So I also look for software that help me to do it, subscribe to some service, quite expensive, but eventually I find a tool which I can share with many of us here, is how to actually do a simple test. Of course, you can actually build a very robust system with this kind of experience. So I'll show you step by step how to create a backtest system by just using point and click. But as Shen has disclaimed, this may not work in real life, but I show you step by step how this thing could work. Okay. The trend strategy is actually can be built with, you know, any indicator. Of course, sometimes we trade without using any indicator, or any price is actually a good indicator. But in this case, we use an indicator because it's easier to understand, get you going, get you started, and eventually you may be start trading without indicator. Okay, so but there are some strategies that build with just price and volume, which as I just mentioned, this is actually another type of trading, and we'll discuss about building strategy with indicator in this case lah. So first is how to develop a strategy. There's many ways that you can consider. So I'll just find out few points that probably is important to get started. Okay, is the idea of using more indicator actually is actually wrong. Okay, I think I remember 20 or 30 years ago, I was thinking, if one indicator is good, so why not I use 20, 30 indicators? If all the indicators says good, then I'll go in, buy this, you know, I sell that, you know. But eventually, there is a common concept, but it was wrong. Then I realized it's actually wrong, because more indicator actually leads into more possibilities, and you have much higher chance of making a mistake in your system. And of course, when you start trading the system, it may work because the condition actually meet that. That's why you develop the system. But once the condition change a little bit, then you might not be able to survive. The system might not be able to survive the test of time. And define rules like how many % risk that you want to risk in this system, or how many contracts or lots that you want to trade, what kind of contracts, you know, and how you want to exit, how you want to enter. You have to design or define such rules into your system. And please remember, there's no perfect strategy exists, you know, and so you need to set reasonable expectation. That means what is your target percentage returns on equity? What is your target profits for certain strategy percent, you know, or cut-off strategy? So you need to set very reasonable expectation. So you want to be like 1,000 or 2,000 times or percent in your return for this strategy. So you may never find a strategy for yourself. So of course, the next thing is there's many things that you need to consider. Is, you know, there are many traps in actually trading, not only backtest. Is curve fitting. Okay, what is curve fitting? Curve fitting is trying to assume whatever happened in the last 5, 10, 20 years will repeat, you know, at the same manner, same pattern for the next 10, 5 years. So which you shouldn't. Of course, whenever we backtest, actually, we try to find potential patterns that will repeat in the future. But trying so hard will lead into curve fitting, which eventually you find yourself looking for a holy grail in trading. So it's difficult, right? Yes, it's difficult. I mean, the concept is there, and implementing the trading is also there, but putting everything together may not be easy at all. But whether it's possible, yes, definitely it's possible. So that's why you need to get started somewhere, sometime. So second is actually confirmation bias again, okay, and manual back testing. So these are all the traps that you may want to avoid, and you need to do for tests rather than just back test and then put the money in. So this is actually very, very dangerous, which you trust your back test system 100%. Today you type back test, tomorrow you follow the signal and put in money and trade the system. This is actually very dangerous. You need a forward test. So a sample strategy here just to illustrate how you use the software. The software I'm going to use is I'm going to show in the next slide. Okay, here you take confirmation bias away and you cannot lie. Okay, remember. So this is actually the most important is you test and create rules to be executed. So you have to slightly design a system. The software that I'm tested is we call Ninja Trader. It is a free software. You can subscribe it. They will actually have a charge version and support and so on. But the free software available for you to start testing it and implement your own strategy. But of course, if you want to start trading live, then they will actually charge you on this. But don't limit yourself to this. But just that I've been using this for a while, and I'm quite comfortable with this. So you may actually use other as well. So there are many video outside to guide you how to get started. But let's say I give you a live example that we can do it for our stocks. So first thing first, today I'm going to pick stochastic as the indicator to be used. So I just set up a few variables which the parameters for stochastic indicator, and also whether the buy and sell area, where is the level that I buy and sell, and target percent is how much percent over here that we target to take profit, the trailing stop percent and stop loss and so on. So with this, I just define the numbers. Okay, you can start with a simpler one. Okay, but I want to show you this can be tested and used in multiple instruments. So first thing first, I go to the condition builder where I will be calling using the stochastic indicator, and I define the parameters to use the parameters that I wanted to, and then I start define a buy signal. So once I define a buy signal, so I'll ask the computer to, these are all without programming, just point and clicks. Okay, so once you trigger a buy signal, okay, over here trigger a buy signal. Okay, so what you do when you trigger a buy signal, you enter into a long position. Okay, long and buy essentially the same thing lah. So what is the condition is, okay, if the stochastic cross, okay, and fire a buy signal, cross above the level that I define, okay, and cross over, so I define buy signal. So my condition is buy. Okay, so after that, so we just put one side first. Okay, we want to show one side. Okay, now you define your profit target, how many percent you wanted by the parameters I'm using. So these are all still point and click. Just they're asking you questions, you just answer one by one, just like you install a software or you play a quiz. So you set a condition, try a very simple one condition kind of thing in the first time. But this one I want to simulate a real simulation. That's why I shows profit targets. There's a stop loss and also trailing stop. Okay, once I done this, I click next, and before that, I also want to show actually you created this using a mouse and click, but actually the program will compile, convert all the point and clicks into programming language. So this is the actual programming language. Okay, you can copy and paste, or you can even edit this to make it more and more robust. So of course, a good system, you need to write programs here because you can add more things rather than the predefined options for you. So, but if you only use the point and click, is actually able to show some things, but you probably need to learn extra. Okay, if you want to have a much better system. Okay, so once I run this system. So if it shows me how many trades that I'm doing, because I just chose one to do long trades, for example. Okay, what is the potential profit, and my maximum loss is actually 2.4%. So which is you think this is what something that you tolerate? Let's say you've been trading, suddenly you may actually lose 2.4% of your money before you start making money again. So the percentage of profit taking, let's say 75%. This is a very basic test. Okay, it shows a very good result. So whether you should try or should not try. So of course you need something more, but because this is actually using a daily bar, so it has got less signal for a longer period of time. But of course, if you put in a tick data, minutes data, it may actually fires even more so-called trading signals. And then the good thing about this system is actually come with chart, which it shows you where do you buy and you cut loss, and where you buy and you make money. So it shows you in a good visual way, and your profit target reached, that's why you exit. So the signal was actually fired with using this kind of thing. Okay, the exit was fired by percent. Okay, so this is also a fire signal. So the first signal failed, the second failure you make money. So you have this kind of at least showing you that your system, no matter how good you actually define it, you still bounce into some losing trades. So here we shows you some using actual data. Actually it works for FKLI for whatever reason for the past few years, because again, you're trying to assume the history may repeat. But if the history don't repeat, how you going to do it? So you need to run a forward test. Forward test is actually also available, but of course there will be even more steps. You need to do it before you actually get the forward test. But at least this shows some good results, which you can gain some profit. Of course, it's not perfect trading. Drawdown is actually 3%, which is not bad. That means if you make money, the maximum that you can lose is actually 3% out of your maximum, probably 2-3 trades losing, in a run. And then when you start testing it, actually you can optimize the parameters. Okay, so how to optimize parameters is actually, in this case, how I get the number 10 and 26 for buy and sell is because I asked the system to give me this number. Okay, so the system or the backtest will start from, let's say, buying at 1, selling at 99, and then buying at 2, selling at 99, buying at 3, selling at 99. They'll actually do all this combination, which sometimes is actually give you sometimes before you actually test it. I have sometimes because I just want to make sure every angle is covered. So I even sometimes it takes like a week, to just get everything calculated and present to my screen. So you probably, but of course, computer now are getting more and more powerful and cheaper. You can get a nice i7 or i9. Only a few thousand ringgit. So yeah, you can actually get a powerful computer to run it now. So of course, that will actually save you quite a lot of time. And then I even actually just want to make sure this strategy works. I went and test on stocks. It still works on stock, okay, especially because I do just a long side. Okay, so I apply different stock into the same strategy. It's actually give you the winning ratio, or the profit ratio is actually higher, but when you're applying this, your drawdowns may be different. Okay, in stocks, actually the drawdowns is actually also different from this instrument. So, but at least it shows you it works in multiple instruments. But of course, you may actually fine tune for each instrument. But in this case, I actually asked the system to optimize. Let's say, for example, you look at here, I put a 10. I didn't put a 10. The computer run 10 on all the buying area, and then selling area is actually above 26, and using the 14 days stochastic. And I just choose one of it because You see, it's testing different parameters for me, okay? But without I have to go through this process over and over again, the system actually tests out and shows that actually you only need to change the entry signals, okay? Then you can get a better and better result. Of course, this is actually how this system is actually catered and developed. Of course, I want to build some system that easier to show you it's profitable, okay? But because it's actually not a lot of trading can be done using this system because it's a daily bar system, but at least it shows or illustrate you how to build a system from certain thinking or idea that you may actually have over time. So this is we call optimization. So you have backtest, and then after backtest you do optimization so that you choose a correct parameter. But you need to put in some parameters before you start testing lah. So this is actually done again for FKLI. Okay, you may have a buy signal here, but it doesn't make money. But this one will give you quite a good profit, and the second one also give you quite a good profit. So with this, you start to have some feeling and ideas how this system can start to help you to probably make money. Okay, and the next slide also shows again these are the trade because it shows you visually. Of course you can say this one also I can identify with my eyeball. But the problem is this one can test up to, you want to test how detailed to optimize the indicator, or, how you want to optimize in terms of percentage of profit, maximum percentage you can take profit in this. And then only you have the confidence to trade with your real money. And because sometimes trading actually, signal will give you this kind of hard time. You lose money, you make money, then you still cut loss, But if you trust the system, you will execute as it's instructed, then it's okay, it's fine. So this is how backtesting is so important, which you need this, confidence when you're actually trading it. Okay, after FKLI, let's backtest one of the instrument that newly available and which I'm strongly recommend, especially those starting to trade and those actually also trading some stocks in Malaysia. If you're not trading the blue chips, probably you need FM70 to hedge your position during whatever turbulence market happens to our own market, stock market, or you just want to speculate. This instrument is actually totally fine. You think that the SME industry will have better or worse performance this year, you can just do a long or do a short in this index, you get what you want. So I also tested the very same system, okay, but on different instruments. So this is the result. To be honest, of course, this result also surprised me lah. This result also surprised me. So you may not need to implement it here, but you actually can get this idea and start developing a simple, one indicator system that can give you probably a potential, very high potential system in long run. To give you an edge, because everybody is actually trying to get an edge over the other party when we are trading. So once you have this, at least you won't be simply follow blindly, a system that you see from internet, you copy from someone else. So this will give you much better idea before you go into trading. So so this system will give you a much better, but you have a higher drawdowns, okay. And you see the good thing about backtest system is that this kind of system or software even inclusive a feature called slippage. Because sometimes when you look at eyeball, you do your own manual analysis, you may think that I want to buy here, sell here, but in reality, your buy and sell may not happen at all because the bidding or asking is actually not filled. So you can add in slippage in the system, which you make yourself harder to get filled. That means 1 tick, 2 ticks to get filled, or you hit the price so that you get immediate fill. But then you may or may not get, you may get a percent, but not in a better price than the system, the market. So with this, we shows that it still gives you a winning edge. Okay, a very simple system. You just use a point and click to do it. Okay, and you can represent everything into, okay, doing it. Okay, this is actually using an EMA in this case, so it gives you much better refined signal, and you have a result here, making money. Of course, as I said, don't over optimize. The parameters it uses here is also with very different features, which I developed over time. Is you're using EMA, okay, which for FM70 the system shows that if you use 5-day EMA crossover, 15 days even EMA, then you may get the result you wanted, and the maximum loss of your capital is actually 1%. So that means if you lose 1%, you cut loss, and your potential profit is actually 14% from your initial entry. So which is, you know, obviously is trend trading. A lot of practice will show so-called trend trading, but you can also backtest scalping. That means every 2 ticks you take profit, you know, whether you can make more money in this way rather than, you know, the other way. So yeah, you have a lot of possibilities here. So these are the parameters that you can change. There's few ways to change. You can pass this to the system, ask the system to do optimization for you, which the system will get everything calculated and give you the result. Or you want to go a little bit adventurous, you put your own parameters and test it manually one by one. You don't have to test so detailed, because even it gives you a perfect signal, you're not going to be getting the same result in real life trading. So it doesn't matter if you backtest and there are some flaws in the system where the flaw may be not a very big one, but the flaw may be the system is not very optimized, or we said we don't want to over optimize it. Okay, so next we move on to the dilemma of trading. Is, you know, system trading sometimes will give you very good result when I present to you, but in reality, once you start putting real money, you may get this, you know, rather than you're making money. So how to overcome this kind of thing is actually you need to do forward tests, okay, but also you need to understand a few traps, you know, because someone can be winning just because of luck and also without fear as a beginner, because you may be just blindly go in, you always have 50% chance of winning, you know. So trading and making money, that doesn't mean that you know how to trade, but trading when the market is actually go against you and you survive this kind of test, is actually usually signify you have the skill. So because the long-term trading business, you know, you cannot rely on just pure luck or, you know, whatever, you know, because you're not fearing the market. Because why beginners do not fear of the market? Because if you have not lose enough money in the market, you don't think it can be so damaging to your account. So that's why you have no fear, you know, going to any market, any direction, or anything you want. So in order to avoid this, you got to understand there are collinear effects in indicator, which most indicator will give you same signal. So, and second is confirmation bias, which I've discussed over and over again. And over optimize, that means you have run the system so much that the system was so perfect, which you actually curve fitting. So once you over optimize, then you become curve fitting by nature. So in order to avoid that, you also need to make sure in case anything fails, what are the elements that helps you reducing your losses is actually risk management. So you need to deploy a risk management into your system. So what is actually risk management? It's important, okay? Risk control is actually the center of every successful trading stories. So which I think this is so true. And control the risks exposed in every trade, because you want to look at your trade and do you expose or overexpose into any risk, you know, any potential, and you need to trade with money that you afford to lose, you know. And also you have to think of, there's so many ways of trading. For example, you can also trade a different direction or spread, you know, so that make sure that your risk exposed can be lower. So you have to be creative in creating system. And money and risk management is important, because having a trading signal is actually not 100% complete system. Okay, you need more than that. And these two element, money and risk management system, is the center of all successful trading. Although people can tell you because of I'm doing this and that, actually without money management or risk management in place, any trading won't make money in long run. And most people will actually fail in this part. So you have to be really concentrate in this. And risk management, it's actually simple. You can actually try, especially directional trading, to risk 1% as your system, which means if this particular trade lose more than 1% of your equity, try stop up, by cut loss or hedge it, or you probably roll this position to another month so that you give you more time to actually trade. And most important at all is actually you need to cut loss, if there is one, before it damage to your account. So 1% is actually a good cut loss point. Otherwise, you need to hedge it as soon as possible. So as for example, you can hedge, you are doing FM70 or you're doing FKLI. Do you know that you can hedge with each other? That means you long FKLI, you can short FM70. If you long FM70, and then something wrong, then you can actually short FKLI to protect your position, and the margin will be reduced because it's considered a spread. 40% is the margin that required to hold these two contracts. So what is actually 1% is, for example, if you have equity of 100,000, okay, you buy a stock or you buy anything, okay, instrument with 100% of stocks means that you actually all into this particular stock or instrument, okay, and your returns totally rely on this particular instrument. And if you're investing in the stock, of course you invest in the company, but for trading you should actually do it in a different way, okay. So set the maximum loss you're willing to take and cut loss the level that your back test shows. Let's say 1%, 2%, 3%. You know that what is actually carries. If 2%, that means I have chance to make more, but I also have chance to lose more. And calculate the percent size of your trade. This is also crucial to know you should trade 1 lot or 2 lots or 3 lots. This is also very important, okay. And it means each trade how much equity you put into risk. So a very simple rule of thumb is every time going almost like 10% of your money is actually a safe idea. Of course, there you can define the formulas much better. I'm just giving you a rough idea. You can test in the system how many lots is actually optimized for me to trade with this kind of equity. You can actually test this as well. So by building a strategy, you don't need to be so complex. Do you know that most of the time I'm trading just by looking at price, and I may also plot certain charts or prices into Excel. I also analyze the pattern of, let's say, date. That means any particular date is actually good for trading. This is not superstitious. This is actually something to do with, like, say, weather, or when the data is released, when is interest rate will be changed, and you have to think doing account, and these are all date related, okay. When is the data announced and this kind of thing. So you need a system that can give you the positive result over long term. And one good trade is or one good day or even months actually doesn't really count. Sometimes I have a common says that in order for you to really trust and trade the system confidently, you may actually need to trade a lot. That means a lot means like really a lot. Let's say you cannot test the system by say over the last 2 trades I make money, over 10 trades I make money. I've been trading this for 100 times and I make 70% of the time, so this thing is good. It's actually not enough. I'm talking about hundreds of times you testing this way, or I'm talking about thousands of times you tested with this, or you're willing to test hundreds of thousands, train this kind of strategy. You need this kind of experience. So start slow, one by one, 1 lot, 2 lots, 3 lots. Eventually you grow to a size. By after trading so many, then you get confident. And you also will go through a process which you get overconfidence. You start having the problem of drawdowns, major drawdowns. You probably go through this kind of process a few more times before you really respect the market and you actually try to preserve your capital as much as possible. So number 4 is actually once you have a robust system, practice by follow the rules defined. And you can define or refine the rules as well, but try to follow the rules. If you're not automatic trading, which you can code everything into your system, then you need to execute. And you treat yourself as a robot. You trade mechanically without thinking so much, into just follow the rules. If the rules meet this criteria, what you need to do, and so on and so forth. So, of course, from stocks, you can combine the financial result and give you much better result. But for indexes, you can actually do this by looking at data, looking at weather, looking at the issues surrounding our economy, and so on. So you can also apply this into, let's say, the commodity, which we have crude palm oil, gold, and all these contracts actually require you to know, the fundamental of this instrument. So with this, I've shared the idea how to create a simple system just to backtest. And I hope you can download the software. They actually offer certain data available from their software, which you can download quite massive data to do your own testing. I forgot what data they provide for free, because usually I have to do it myself for the market that I'm trading. So by downloading this software, and you can join their communities forum and YouTube, then you can self-learn from it. And this software probably a good start. Of course, there are more software available outside, but this is a good start if you want to know backtesting. But of course, again, backtesting is actually not everything. It's just part of algorithmic trading. Algorithmic trading may lead to automatic trading, which you need to acquire different software, different skill, different programming to actually code the order filings and all this. But eventually, I believe the broker is actually working, Malaysian brokers working towards this angle. Eventually, you find there will be API available for you to start doing automated trading. But at least you need a backtest system. And this kind of software usually they support APIs that can call the API and fire orders for you. So with this, probably I pass back the control to our moderator, and probably we can go into Q&A session from here.
Yeah, thank you so much, CC, for your quite heavy and technical session on the back testing. All right, and if you have any questions to ask our speaker today, please write it in the question box, and we will address your questions accordingly. Please write the question in full sentence so we can understand. All right, so the first question I have on my screen is, may I know, can we set parameter based on volume or moving average?
Based on more volume, volume probably can. Yeah, you probably, let's say you test FKLI system, that how many volumes actually threshold to trigger, and you do a long or short signal, is actually much better chance than you have a low volume and you fire. Yeah, you can use that as volume indicator. I mean, part of the elements. Moving average, definitely yes. This is good trend trading system, but of course, it has got the pros and cons. But you see, because I've been trading quite some times, I accept any system with pros and cons, which we can actually, not to say overcome, but we accept that any trading is not 100%. In fact, you also can backtest how many so-called percent that you need to trade and make money in the long run. I even use a month, for example, as a parameter. That means whether January long is better than short, or whether February is long bias or short bias, or maybe March is better for long or short bias. I even test these kind of ways, and you'll be surprised. Actually, a lot of instruments has this kind of tendency. That means it's better for you to long, let's say, CPO, palm oil, in October, November, December, and January, and then from probably March onwards, probably April, May, June is doing short will be favorable. So how you come up this? Actually, you need a backtest. Of course, you may be shaped by plotting all this heat map and get this idea, but you can actually test it out also. Yep, volume and moving average definitely can make it as a indicator.
Excellent. All right. So the next question we have is, what is API actually?
API should be, I've been using this term for long. Application programming interface. That means this is an old term I think used by Windows programmers, where let's say you have a trading platform, the trading platform ABC, and then once this ABC software you may actually need a license, or you need a service subscription, or you need permission from your broker that give you the API. The software, once they enable in your computer, you can actually use another programmer to send orders and read orders from this API. So API basically a small piece of software running on computer to help you, your own software, let's say in this case NinjaTrader, or even Excel. Excel can access API that to fire a buy and sell signal into your trading platform ABC. So API stands for application programming or programmable interface. So yeah, something like that.
Okay. So the next question is, in your opinion, how long should we backtest or forward test?
Okay, backtest of course depends on your time frame. At least a cycle is actually at least 5 to 10 years time. So if possible, you at least test one or more than one cycle. So the rule of thumb is use as much data as possible to backtest. Okay, so if you have 3 years data, use 3 years. You have 4 years data, use 4 years. Now come to forward testing, then is another element. Forward testing, you may use a paper or paper trading, from the day you test to in real life trading or paper trading. But actually you can create forward test data. Forward test data, that means random data that it haven't happens before. But what if you have 10 years data? What you can do is don't use all the data for backtest. Use 5 years for backtest and use 5 years to random test the system that you created. So with this, actually, you can have 2 sets of data from one data actually. One is actually used to create the system optimization and get the parameters. Second set, you use it to do a forward test. So you can be creative. Sometimes you test January, February to March, or 6 months data as your backtest source, and then the next 6 months for your forward test. So the duration is depends. Sometimes if you have testing the text and minutes data, you probably need 3, 4, 5 years, or even 1 year or months will be enough. But daily bar probably you need a few years, that kind of thing. The rule of thumb is always use as much as possible, get as much data as possible, to do the testing. But save some portion of data for test as well.
Okay. So the next question is there a way to backtest using indicators of directional movement index and stochastic?
Yes, actually you can. The NinjaTrader, in fact, has got, I don't know, hundreds of indicator available there. You can create your own indicator also by using the same software. You can create the indicator, and if you join the forums or a lot of website, you can even download their indicator if it's not available in the system. So yes, you can use almost all the known indicator in this world, and you can download a lot of indicator not available in NinjaTrader. You just download and install. It's quite straightforward actually, and you good to test any indicator you wanted.
Okay. Now, besides NinjaTrader, do you have any other software we can do back testing with very minimal costs? I mean, for the question is, for both local data and international data?
Okay, actually a lot of backtest software actually came from overseas. Malaysia software or the charting software, some comes with scanner and all this, which is actually probably not enough. But backtest is actually totally different environment. I think NinjaTrader is one of it that I tested, that you can start with no cost, actually, just straight away. Now you go there and download, yeah, you can get it, and with some sample data already, and a lot of community guidance. Other software like Trade Navigator, they all charge you, they give you free trial like 30 days, but they charge you thousands of dollars to get the data and start simulating. And learning is actually not easy also for certain software. Other than that, I think the lower cost than this is almost not existence. But the local data problem is actually a lot of charting software in Malaysia provide the local data which you can save by end of the day. You may need some conversion using Excel or any programming language that you know, and just convert to a text file. You can import into NinjaTrader. So data wise, it won't be a big problem because we are just using a local variable. So if you subscribe to any charting service, usually they come with a export function that you can import into Ninja, but you need some manual conversion by yourself. So far, I don't find any other software that that as low as you start with free actually.
Okay. The next question is, can the backtest system set up using more than one indicator?
Yes, it may actually. You can have. So far, I don't see the limits any numbers of indicators. You can have 1, 2, 3, 4, 10s. Of course, when you're trying to optimize, each parameters you need to optimize will be testing once. Let's say if you give let's say EMA 10, but you don't pick 10, you pick from 5 days to 20 days. So they'll test from 5 days, test once your data, 5 years, then 6, and then 5 years, and then 7, 5 years. But if you have another parameter, so let's say 2 EMA, so the 5 you match with 5, then, or if you set 10, 5 and 10, okay, 10 years or 5 years, then 6 and 10, 5 years, 7 and 10, 5 years. So we test like multiple, as I said, exponential. That means the more indicators, parameters that you put in, the number of times that tested for so many years that you're testing is exponential. So the only problem is so many indicators may actually need like months to complete the test if your computer is not fast enough. First thing first. Second is the more indicator usually doesn't give you a better result. But it will give you a very good result, perfect result, but it's not something that you're looking for. So my recommendation is have one indicator and one only. So once you can develop a system with one indicator, and it's almost give you like 60-70% chance of winning, you're actually good to do a live test or forward test already. So you don't need multiple indicator, but it's actually fun to test lah. So at least you can see whether more indicator can give you better result or not. But my recommendation is actually always start with one, and if possible sticks to one. But of course, it get more than one now, because if you include volumes, you include price, it's already two things, and you include an EMA, it's already like another element. So it's usually more than one, but try to limit to one indicator is best.
All right. So one indicator is best. Okay, so in your experience, does auto trading work, or is there anything that we need to be careful of when we are running in auto mode?
Of course, automated trading has been contributed to a lot of trading volume, some in Malaysia and a lot in especially US. So it works, but be careful with automated trading system if you have no good background in doing that, because once you have bug, let's say you have a losing position, rather than you cut the position, if you program it wrongly, you keep on adding a losing side, then it will actually cost you lose even more money than you initially planned to. So yeah, this will give you so-called, you need to be very, very careful when putting it live, especially your computer need to be, let's say, backup power, otherwise if your house or your office run out of power, but the trading hours still continue, but you have no power to execute your cut loss or profit taking, there would be problem. Oh yeah, so I actually come across that I want to suggest just now, besides this Ninja Trader, because it has got a very robust system, but when you really like during live trading, automated trading, you can try a software called TT. T for Thailand, TT, that's 2T, or trading technologies. So this company provides software which, after you backtest, you know what to do. You can actually code it into their system called TT, or trading technologies, and they will run your software besides the action. So that means your code is actually no longer sit in your house or office. The code will sit in their office or their servers, so it will back up, and internet connectivity is actually not an issue. But you only need the strategy works. So if you code into the strategy, your software is actually running there and keep on trading. So anything that you think is wrong, then you just press a switch, stop trading the automatic trading system, so that you eliminate one of your problem, which internet connectivity, power outage, and speed of the computer. They will actually solve it for you. But of course, you need to pay a small fee software probably. Second is they call fire cost. That means every transaction they will probably charge you a small fee. We're talking about say 25 cent USD, that kind of range, which I know some people are using that to trade our local system as well. So you may look ask for a broker. Some of the brokers actually do provide the TT as one of their alternative OMS, which not only you can trade, you can actually code it. And the good thing is that the coding is actually can be done via a web page. That means you can do it in your phone, iPad, computer, or in any other's computer, not necessarily using your own computer. So TT technology, trading technology is one of the software that you can implement using it. Okay.
Okay. So what parameters do you prefer for KLSE stocks in your setup?
Okay. If you talk about stocks, actually, it illustrates just now. You can actually do it for futures and stocks, because a good system should works. A good trend trading system should works. Of course, stock has got extra elements like the announcement of news, dividends, and all this. The stochastic that I'm using, that I showed to you, is using a stochastic. I like stochastic because stochastic actually give you a swing trading signals. So you're using a 14 days, and the slow is 14.33. That slow stochastic 14.33. So you get a very slow, but a very robust system. But you need to test, let's say in particular, probably for FKLI, it uses different level of triggering in terms of the buying signal and so on and so forth. But so far I tested, I can just use one size fit all. It means I can trigger the buy at 10. That means the level of stochastic is 10, below 10. The selling is actually above 26. But why is selling? Selling is actually if any crossover above 26, you can actually consider a sell. So this one works especially for one directional trading, which it actually helps in terms of trading to look for signal. So this is the parameter I'm using. I'm recommending you use the stochastic as your probably primary indicator. The next one I also recommend, which I show you in the FM70, is actually EMA, 2 EMA crossing. So they are also particularly good in terms of to create your own trend following system. But again, these things are not perfect, and even they are perfect if someone tells you, but you always have to assume they are not perfect. But the fact is, I can tell you they are not perfect.
Okay. If perfect, everybody makes money already.
Yeah.
Okay, yeah. I also like EMA and stochastic. Next is can we do a Ninja Trader on smartphone?
I'm not aware they have smartphone or not. In fact, I'm using it. I'm also lazy to update the software and all this, because I'm lazy. I'm using it to test out my existing system. So I just focus on copying the data into and test it. but I don't think they have a programming and coding and all this in mobile. So usually they support Windows-based PC. Yeah, so probably you need to use a Windows-based PC, but you can easily get a Windows computer nowadays. With a tablet or what in 1,000 ring. But when doing a back test, you need a lot of processing power. So getting a minimum i3, i5 processor will be needed lah.
Okay. Now, on what time frame should we do the back test?
It actually really depends on your strategy. In fact, that is one of the elements you can backtest. You can ask the system to test 5 minutes. You test 10 minutes, 15 minutes. You can ask it to test these parameters. It works best in what time frame. For me, you don't have to go so fast because sometimes the market doesn't move as much. If you shorten it to 5 minutes or 10 minutes. So I would recommend you to start with daily bar first. That means you're doing a daily bar, and then you start testing probably 3 to 5 years, for starts. And if you want to do fixed data, you can employ something from 5 to 15 minutes. Is actually a good test time frame for you to start off. I'll highly recommend to start with daily bar first.
Okay, daily bar. So this is inquiring your service. Hi CC, do you provide strategy coding service for Ninja Trader platform?
In a matter of fact, I think I never done this. But I think any good programmer, they actually able to code it for you as long as the language is written that you need to write is actually C#, which is exactly like the Microsoft Visual Series. The software is actually free now, a Microsoft development environment. So C# is not difficult to learn also, but any programmer should have no problem at all writing a C#. Even they are not called writing a C#, they should be able to just write it because nowadays the programming language are quite common actually. But do I provide this service? No, but probably we can discuss. If I feel like the system, probably we can make it go. I could actually help you to put this into test. Provided I have this time to help you do that. Should be a big problem for as discussion purpose lah. So yeah, you can drop an email to my company in. You can go to my website straitsindex.com. So drop me an email. Probably if the system is good, probably I can give it a try. But probably I won't charge you as a service lah. But if you're really serious to do this as a business, either acquire this programming language, it's not difficult. It's not difficult. Or you get someone to actually coach you, or get a students from university or college. Most likely, they can do it easily for you. Oh, of course, I have friends that are really happy to have to do this kind of programming outsourcing. And there's a lot of outsourcing programmers in the internet actually providing this, like charge you by hours or something like that.
Okay. Yeah. So the next question we have is, do you have any broker in Malaysia that can provide algo trading?
They provide algo trading means that they give you the platform, or they're giving you the service like a copy robot or copy trade, this kind of thing lah. I'm not sure which one you're referring to, but whether they can actually give you the API to start trading algo as your own. Yes, there are actually many brokers has been providing this for many years, but usually they are not marketing it as aggressive because the people asking for it also not that many, and usually this kind of service actually the platform charges not many people actually willing to pay upfront. yeah, there are most brokers actually, some even local software house, or they're actually already providing these kind of APIs. So yes, I think most brokers are able to provide you this kind of algorithmic enabled API. But this algo trading enabled means you need to do the algo yourself. You have to build the algo. We make a trading system, and then you file orders and so on lah. So I think most are actually, yeah, you can do it, because now everything is direct trading into electronics platform. Yeah, you can find that. Just ask a broker. Usually they can provide this.
Okay. Which broker provide TT platform?
I think most are able to provide to you. TT has got an office in Singapore. They do actually try to provide the system in Malaysia this year, but I think haven't have a stronghold. But most of the brokers in Malaysia, one way or another, they have access to Singapore, or whether they have Singapore office. So usually, brokers that have Singapore office can easily, or they have interbroking into Singapore brokers, they can easily provide these tools to you. So you're surprised actually your broker actually can give you more than they put in their website. So your broker, probably the dealer or reminder that you ask, probably they don't not aware of the service that actually their backend can provide. So if you really request and escalate to the development team or IT department, usually those broker with Singapore present, I think they can provide this service to you already. As far as I know, there's many can. But if you want just to test out the taste of algorithmic trading, TT you can register for free, okay, to try out. But they don't have Malaysian product data. Maybe they have now. Okay, I heard they have, because I know someone who's using TT to trade now, Malaysian product. So the test is actually free already. So go test out. And then after that, you can either contact your broker or contact TT to provide you the company that provide this. Okay.
Okay. Now, how do we pass the local data like FKLI to Ninja Trader?
Ninja Trader format is a bit different. You can look up in one of their forum or website. I cannot recall, but it's very simple. Just that date, time, the price, volume. That's it. So, but you need, if you're doing it yourself, the difficult part is actually you also need to name the file name to import this security data. The file name of the data to be imported to your Ninja Trader must match the instrument name in it, because this kind of thing no one teach one. I also like spend like I don't know how hours to discover actually a lot of things that was never documented. Nowadays nobody document everything, like no one show you how to use your phone, right? So you have to discover it by yourself. So I discovered that you have to match the file name and all this. The detailed formats, I don't think you have problem to so-called find for that. So one good way to know the format is usually it comes with some sample data, either S&P or what, I cannot remember, or Go. You try export the data into a text file, then you know the format, right? So yeah, do a reverse thinking, then you get what you want already. But make sure the file name match the instrument that you wanted to do lah.
Okay. Now, how do we backtest according to different market volatility?
Different market volatility. So, assuming that you talk about weeks, I assuming you talk about, let's say, there's two instruments, different market. Okay, probably one is let's say composite index or FKLI. One is actually FM70. So you can actually add two instruments. One stock or one index called one instrument. So you can mix two into one. You can check the difference of two. Okay. So maybe you can develop a strategy. Let's say if FKLI up or higher by how many percent of FM70, you can do a short FKLI, long FM70. Or how many percent FM70 is higher than FKLI, you can do a short FM70 and long FKLI. So maybe this is something that you're asking me. But in terms of real volatility, is actually you can talk about weeks or so, but that's not tradable in Malaysia. But in a lot of trading, in fact, a lot of trading is trading volatility. Let's say, for example, I trade palm oil. So palm oil, there's another instrument inside there called spread trading. So the spread trading is that in a way you can mix different contracts to make it like you are trading the volatility. That means you are either buy volatility or you sell volatility. So you can make your orders such a way it's able to simulate and trading that way. So when you're trading volatility, sometimes you are actually usually against the market. So yeah, this is actually something very good to explore. You can test anything that you like.
Okay. The next question we have is for multi-lots trading, like 3 lots entry, 2 lots exit, and first target, and exit last lot at second target. Will this strategy work for backtest software?
Can, but the complexity is actually on order management, which you need to code it. The default point and click, it doesn't has this built-in, but of course, you can really go to there's many forums there, download a sample, someone have coded and then share with you. Just download it. Once you open it, it's actually a source code. So the source code you can manipulate it to your taste, but most likely they have someone already written this kind of way. Yes, it can be, but the default point and click doesn't allow you to do as much. But yeah, you can always add on to by plugging a source code to it.
Okay. The follow-up question is, what programming language does it use?
C#. So C# is actually by Microsoft. Okay, they are very similar to C++, and but as I said, now most of the languages available are very similar. So the way they call the object, the calling the
Logic.
doing all the loops, logics are very similar. So language is actually not a barrier. In fact, there are some website which convert one language to the other. Let's say if you know Visual Basic, you know Python, they actually can convert Python or Visual Basic loop into C# for you. So and vice versa. So it wouldn't be a big problem. And another programming language that allow you to do backtest is Python. So, but Python has got less visual interface, which you cannot point and click. Okay. So another angle is actually if you want to do algo, there's a lot of people learning and doing algo in Python language, which you can also start that. So it's either you choose Ninja, which from visual, then slowly to programming, or Python straight away you start with all the libraries, all the codings and so on and so forth. And that one, assuming you know all the programming interface languages and all that lah. So then only you can start coding in Python. But there are online courses available to code Python for algorithmic trading. So nice nowadays. The internet is as good as a university. You can learn almost everything from it without paying a penny. So yeah, I wish I born now so I can learn things faster. Not like whenever I learn something, last time we need to buy books, tens of books, read all, and then before we can start doing something else. Yeah. You Google this kind of angles, then you will find information. So the Python is the big snake Python. So the programming language for a lot of so-called algorithmic training or coding are in Python as well. But Ninja using C#. So actually anyone can pick a language, but yeah, the community of algorithmic trading mostly are using Python, but the community of Ninja Trader are using C#.
You sound really well versed in programming. I am really blown away. Okay, now we've come to the end of this webinar. Let me tell you more about the next week webinar. Okay, now today we had a very heavy topic, and next week we are going to talk about case study and market analysis. Not next week, next month. Apologies. Yeah, next month we'll be talking about case study and market analysis of FKLI. It will take place on the 13th of June 2019, 8:30 to 10 p.m. So I have just posted the registration link in the chat box. So please, if you want to learn how to trade FKLI, how to do market analysis of FKLI, please join our next futures webinar on 13th of June, Thursday. All right. So we've come to the end. Thank you so much, CC, for your wonderful yet very technical topic today. I guess many of us have learned a great deal about how we can do back tests, how we should do maybe a bit of forward tests, how do we do a bit of risk management, you know, to see how well our strategy work. And thank you so much for your wonderful sharing.
Welcome.
Yeah, and thank you everybody for tuning in, and have a pleasant rest of the day. Bye bye.